Welcome to Market View with Ike Ios and friends. This show that not only reveals and analyzes the inside story on today's market news, but also uncovers the areas where investors can make money right now.
Good morning. Mike Ios here, your host for my music guest, my very good friend, Mrs. Erin Swenlin. Hi, Erin. How are you?
I'm doing well. Thank you for having me today.
My pleasure. Erin, the S&P has tested the 4250, 4300 zone 6 times. Usually when an index or a stock keeps retesting either a support area or a resistance area, eventually it breaks through. So I'm curious to hear your thoughts going forward.
All right. Well, one of the things I wrote last week was that I had proof that DecisionPoint we're not perma bears. We're always kind of put in that niche. But as I tell everyone, our job is to be devil's advocate, and so we're going to always look for things that will tell you whether a trend is breaking down if we're in a bull market move, or as the case is right now, we have a kind of a larger decline that happened, through September, and so we were looking for positives as we went through, and we've had them. So right now, when you look at that 5-month candlestick chart that I brought, currently, yesterday we broke out, but we had that long wick on that candle, and that's usually a bad sign. We also had some somewhat climactic activity that occurred. I'll talk about that shortly. But this is a falling wedge, and price, even now that it is lower, is still holding above that 20-day EMA. It's still flirting with, being below the 50-day or above it. We don't know how it's going to finish today. But we're expecting, because of this formation, a breakout to the upside. So we're currently in a short-term bullish stance, but we kind of expected what's going on today, and I'll explain that when we get to our next chart. But at this point, we're short-term bullish, and I've got a lot of things on my indicators that tell me that that's really where we need to be.
Well, how about the next chart?
Yes, so this one we've been paying a lot more attention to as of late. This is our Climax Analysis chart, and it's kind of busy, but what we want to do is find out when we get really climactic readings, or really high readings, or outside the normal range readings on net AD and net AD volume. We look at the VIX, of course. We invert our VIX so that oversold's on the bottom and overbought's on the top. Then I look at total volume, and then we have the volume ratios. And this is something a lot of people don't pay attention to, but something we've found to be extraordinarily useful in marking pivot points in the short term for the market. And so you can see with those vertical dotted lines, those indicate climax days. So a red one means that we had climactic activity to the downside, and the green verticals are when we had climactic activity to the upside. Climaxes will help you determine what's going to happen in the next day or two. Sometimes it turns out to be a more lengthy rally out of some of these pivot points. Sometimes it's a more lengthy decline, but typically we look at these climaxes as a 1, 2, 3 day reading of what's going to happen moving forward. So the last climax we had was actually Monday, and you can see on that green vertical, where the last green vertical, we had total volume was just about at the annual average, if not higher. You can see that net AD readings were elevated. They weren't quite outside the normal range, but they were still quite elevated. And then those up-down ratios are what really tipped us off that it was a climax day. We look at a threshold of 3.0 on the volume ratios. And so we want to see if they go above 3, that tells me that we had a climax day. And then I go and look at net AD, I go and look at these other indicators to see if they are confirming what I'm seeing. So you can see yesterday, we actually did see a climactic reading on the New York Stock Exchange up-down volume ratio. But we did not get confirmation from our total volume indicator. Yes, we had elevated net AD, but it wasn't outside the range. And the VIX had just climbed above its EMA on the inverted scale, and that's a bullish sign. So it looked like it was going to be a climax. I don't think that it was. If it had been a true climax, we would have been looking at it as an upside exhaustion of the current move. But it wasn't quite a climax. So my thought moving into today and the next day or two is that we would see likely a pause, a digestion period for the last 3 days we had of upside. So since it wasn't a total upside climax, which would have made it an exhaustion, it just was cluing and hinting to me that we were going to see kind of some churn and sideways movement until our next climactic move. So at this point, I'm not surprised to see what's happening on the S&P, and I suspect we're going to continue to kind of move sideways for a little.
The next chart is a very interesting one because it's the market bias assessment chart.
Yes, and I know it has your favorite indicators.
Yes.
A couple of them, the Silver Cross Index and the Golden Cross Index. So what we found is when we were examining participation as far as the Silver Cross Index, which tells you how many stocks have a 20 above their 50-day EMA, and the Golden Cross, which tells you how many stocks have their 50-day EMA over their 200. So they're an established bull market configurations, basically, if you're with those silver crosses and those golden crosses. But we found that if you compare the Silver Cross Index percentage with the percent of participation of stocks above their 20 and 50, so you compare those percentages to the SCI percentage, and if they're higher, that tells you you have a bullish bias. That tells you that the SCI has the opportunity to continue higher because participation is suggesting that more stocks are going to see a 20-day EMA above their 50-day EMA. You can also see that on percent of stocks above their 20, we had a positive divergence going into this recent bottom. And you can see that right now that Silver Cross is turning up. So all of my indicators right now, and I have a bunch more that I didn't bring, a lot of them showed these positive divergences going into this bottom, and we're still seeing increased participation that leads us to believe that this declining trend is going to likely end. So that's kind of where we're sitting. We have a bullish bias in the short term and in the intermediate term because we have higher participation percentages than the SCI reading. So it's one of those new things, the golden and silver cross indexes are relatively new indicators to us. Carl came up with that about 4 or 5 years ago. So we've been studying it for a shorter amount of time than our other indicators. And like I said, one of the things I found I was doing all the time was comparing the participation numbers to the Silver Cross Index. So I thought, well, I need to get them all on the same chart. So that's what I've done here so that we can assess what the market bias is in the short and intermediate term. And right now, I would say the bias is pretty bullish in both of those time frames.
Well, let's turn our attention to gold and the gold ETF, GLD.
So I've been bullish on gold since we started that move out of that low at the end of September. The indicators have just been really soft. Like they just really aren't telling us that we're going to get a big upside move. But the PMO is still looking good. It's above its signal line. RSI, I would like to see positive right now. Right now we have this giant black candlestick, filled black candlestick, and those are not always good to see. That tells you that price, while trading higher than the day before, is still well below its open for the day. And so that tells you that, we started strong and we're fading. And so that's something we really don't want to see at this point. But it did, we are seeing price now above the 50-day EMA, I think. Yeah, it doesn't look like we're quite there, but the high did almost get above that 50-day EMA, certainly above the 20. It's been really stuck underneath the 20 and above that support level at that June low. But now we are seeing the breakout, and I would be more positive about it, like I said, if it weren't such a large filled black candle. But I still think that this is positive for gold. I think gold is coming back into favor. You can see those discounts that we track on the bottom, that they had gotten they expanded quite a bit before we started to see this sideways movement. And, it tells you that investors are still really bearish on gold. And sentiment being contrarian, we wanted to see people get really bearish on gold. And that's what we saw. And now it looks like with those discounts sort of contracting somewhat, that we're going to start seeing that move to the upside. But, right now, like I said, this candlestick is a little suspect to me when I'm watching the chart right now, but I'm still pretty much bullish on gold.
Okay, and how about the gold miners?
Yes, this brings me into one of the areas of the market right now that is seeing some really nice improvement, showing a lot of relative strength, and that is the gold miners, right? So we have this bullish falling wedge, and price is just about ready to break out of the top of that wedge as expected. You have a PMO that just gave us a crossover buy. You have an RSI that just hit positive territory. Today, we are trading above the 20-day EMA, and we've forayed above the February low as well. So I see this as a pretty solid short-term, maybe even intermediate-term bottom for gold miners. I'm expecting them to continue to move higher next week, and I think general mining also looks pretty good right now. The materials sector itself is really just starting to see some more interest and movement in it. But if you look under the hood here at the gold miners, you can see that we have 60% with price above their 20-day EMA and 13% above the 50. Both of those percentages are quite a bit higher than the silver cross index. So that tells me that we have a bullish bias going on right now on gold miners. And I'd like to see some of them get their price above their 200-day EMA. But most of the gold miners have a similar situation as on this chart, where you can see price on that decline just pulled way down below that 200-day EMA. So there's some work to do. I wouldn't be surprised if that percentage stays at zero for quite some time. But I do think short-term, gold miners are looking really positive right now.
Let's talk about a couple of gold mining stocks, starting with Eldorado Gold, EGO.
Yes, and I actually covered 3 gold miners in an article that I printed yesterday. It is free, so if you go to DecisionPoint.com, there is the article on gold miners, and one of them has the green label of free. So you can click on it and read what I'm thinking about gold miners and see all 3 charts. But I brought 2 to go over today. And the first one, like you said, is Eldorado Gold. And I think this one is really shaped up. It's looking great. It broke out of its falling wedge, unlike GDX, hadn't done that yet. And you can see really powerful momentum going to the upside. You can see the stochastics rising strongly. You can see a positive OBV divergence that led into this rally, which means we should expect it to be sustained for some time. I really like Eldorado Gold. I think that one is a pretty good-looking chart right now for gold miners. And then the other one I brought is Gold Fields Limited. Full disclosure, I do own this one. And you can see the RSI, again, just got positive. You can see today it's actually trading completely above that 50-day EMA after breaking out of that bullish falling wedge. I like the setup on this chart. I think we're going to see some more movement to the upside. I mean, stochastics look really good as well.
Okay, now the next one is a very interesting company, Upwork Inc.
Yes, and I brought this one completely off the reservation as far as what we've been talking about, but I really, I presented this to my Diamond subscribers yesterday. It was really shaping up for a breakout, and sure enough, that's what we're seeing right now. I think there's a lot of upside potential here. Even though we have a 4% gain, I think we're going to see higher gains. You can see on stochastics still rising strongly, RSI positive and not overbought. And then seeing those two bottoms right along the signal line for the PMO, I think is also a very positive setup. I think there's still a lot of upside potential on this one, but I had to bring it. I don't own this one. I really am tempted to get in on it, but I'm trying to limit my market exposure right now until I'm comfortable that we're going to get further upside in the intermediate term. Right now, it's, with the market being mostly sideways, I'm happy to be in my gold miner stock, but I'm a little nervous about expanding my exposure. So I didn't buy this one, but I do have to say I love the way it's set up.
Erin, anything else you'd like to add?
I would just say that, come to DecisionPoint.com. I think we have the ad that tells you we have a free Monday trading room. And if you sign up for our free email list, you will get the information to join that trading room, and you will always get the recordings of that trading room. So that's something I wanted to highlight. And we do have a special running, and I'm making it a little sweeter for your listeners. But if you want to get a 2-week trial, I always run a 1-week trial. But if you want a 2-week trial of our publications, all you have to do is subscribe to the bundle and use the coupon code DP trial and then the number 2. And that will get you a free 2-week trial of both of our subscriptions. You can cancel at any time and still get those 2 weeks. So you don't have to worry about getting charged if you don't want to. You can set that up so that won't happen. But even if you do and there's a problem, I'm more than happy to fix that for you. But a lot of our subscribers are from free trials. They've tried us out. They think we're pretty awesome. I think we're pretty awesome too. So
thank you so much. Have a great day.
Yes, you as well, and have a great weekend. We'll talk to you again maybe next month.